Hey, TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. I'm also on Facebook and I'm on YouTube at youtube.com/Dallas Trading Floor. I'm on Periscope, pscp.tv/Dallas Trading Floor. I'm also on Twitch. So, it's an interesting day. The market is kind of recovering from Friday. Looks like it's up, so that's a good thing. Just kind of there's continue to be shakeout. I think we're getting kind of close to potentially a reversal, but we're not there yet. So you don't want to be short the market yet. I think we may be coming to that, but we're not there yet. So for everybody out there, just kind of look at your positions. The quality stocks seem to be working. Not so much with a lot of other things, but that's sort of how this rally has been. It's sort of it's kind of gone both ways. The Qs are up today. It's 240 on the QQQ. That's the Invesco QQQ Trust. Basically covers the 100 largest stocks on the Nasdaq. It's up. Earlier this morning, it was not. The diamond, which represents the Dow Jones, was up. It's also up on this slide, 252. And the important one is the spider, currently trading at about 302.03. It seems that the spider has been bouncing off that 300-day line, and so it seems that the programmatic traders are definitely in there. Earlier, as you can see today, I had it at 385, up 80 cents. Basically, this is almost exactly at the 300-day moving average. So I do expect the spider to be in the trading range from about where this 40-day moving average line is. It's just bouncing right off that, and that's about the 300 level. It seems like that's where the programmatic traders are putting their markers down, and that's sort of where it's bouncing, it seems like. So something to consider. Here's the thing: the S&P 500, basically 2/3 of the bottom half of the S&P 500 are financials, and they are not doing as well as the mega cap growth stocks. So this is something you ought to be very careful with. Now, a very interesting thing happened, and that is Tesla is going to be entering the S&P 500. So it will change the makeup of that, because in the last few trading sessions, Tesla was down, but it looks like it's roaring back. Once it becomes part of the S&P 500, it'll have to be included in all of these averages. So watch out for that. I think that will stabilize the issue a little bit. Here's also a chart of the Invesco QQQ Trust. As you can see, it's sort of bouncing around, and it seems to be this 240 level seems to be an important level for it, and it seems to be where it's currently going. So that seems to be it. Again, the Dow Jones, very interesting. Boeing is up today, and I think that part of the reason we're seeing strength in Boeing is because people are getting back. They're anticipating the 737 MAX being a success, and I hope it is. I just am not putting my money there because I don't think that it really has any legs on that. But that's just my opinion. I am not in Boeing currently. I'm in Tesla rather than Boeing, just because I think that there's a changing of the guard, and unfortunately, Boeing is not part of that. I wish they would be, but I just don't think they are. So I don't think that's the way to go. Just wanted to show you the big cap 10. Interestingly enough, and Facebook is very weak today because they indicated that they're going to be, installing some policies to possibly take some people off of Facebook. The big companies that advertise have decided to pull back their advertising. I'm not so sure this is totally about Facebook. I think it's, they realize that if we don't reopen, the demand for consumer goods will be down. So I think they're pulling back their advertising. That's just my opinion. Very interesting. As Facebook declines, there is one stock that you might want to look at. It's very expensive, but I think it's well worth looking at. It's TTD, the trade desk. And basically what they do is they syndicate the ad buys for all of the other platforms, excluding Facebook, excluding Google. So it's a very interesting stock, and there's a very interesting option play that I was trying to work out on it. It's a lot of interest in this stock. It's number one on the big cap 10. It's the trade desk, and then so that's one that you might want to possibly look at. All right, so let's see. Let me go back. Add to the stream. There we go. All right. So hey, hi, how are you doing? All right. For everyone there. Oh, hey, hello, Wendy from Calgary. Really appreciate you taking a look at what I have to say. For everybody out there, it coming into this July 4th holiday, the trading will be through. They'll be through the second only, and we won't be trading on the third. And of course, that's for the U.S. Independence Day holiday, which is on the 4th, and there's a holiday on the 3rd. So this is a short week on the exchanges that trade in the U.S. The NASDAQ, the New York Stock Exchange, and those exchanges. So it's going to be a short week from there. So just kind of wanted to give you a heads up on that. All right, we have an interesting question here on a stock that I have not been in for a while. It's called Space. It's Virgin Galactic. That symbol on it is Space, SPCE. I just wanted to give you a little bit of a look at this one to see how it's performing. Now, interestingly enough, with Space, we've seen we've seen them possibly pick up a contract with NASA that will allow them to do some training, which would be really helpful for them because of their cash flow situation. The main person behind this, of course, is Richard Branson, and part of the issue with Space is that they may be running low on money. They don't have very much revenue, and this has been a problem. I seem to have a bit of a stalling on my internet connection here, so hopefully that'll come back. I seem to be stalled on. There we go. It seems to be coming back there. So let me see about Space. By the way, for everybody watching me on TikTok, oh, and by the way, I think you should be. I want to put this out there. It looks as if India has banned TikTok, at least in India, and that is sort of going to affect. I hope it doesn't affect the platform overall. I really like TikTok. But if it does, I want to make sure that I keep in touch with everybody out there. And one of the ways to do that, of course, is to get on my action alerts list. And that's really easy to do if you're on TikTok. Just go to my profile, just tap on the link there, and you'll be taken right to a sign-up page. Just put in your email, and you'll get all the action alerts. And, I'll tell you what's going to happen if they indeed, I don't know if they're going to shut down TikTok or whatever. It probably would never be shut down in the U.S., but it's definitely being shut down in India. India and China, of course, are having difficulties, and that's going to affect TikTok, unfortunately. But it won't affect Twitch. It won't affect Periscope, Facebook, or YouTube. And by the way, I'm on YouTube at youtube.com/Dallas Trading Floor, and also on Twitch at twitch.tv/Dallas Trading Floor. So I'll be broadcasting on those regardless. Here's the thing about Virgin Galactic Space. Let me show you this chart here. I'm just going to switch over here and kind of give you an idea of what we're talking about here with the chart on this. This is not really a viable chart right now. I was in the stock when it moved up, and then this basically was an earnings call. I sold before the earnings call. I do this regularly. If a stock is going to be going through earnings, I don't typically like to hold stock through earnings, with some exceptions. I don't like to, because it can reverse, and that's indeed what happened here with Space. I don't know if this is ready to buy. I think you should watch list this stock, but there's a number of things here. I just want to see some more conviction here before doing anything else. So That's that's my opinion with Virgin Galactic. I'm not against the stock, but I just think that there's better places in the market right now to be rather than space. I just hasn't shown the kind of action that I think is going to make you money, and that's really what I'm trying to do here, is give you as best I can kind of the look there. What's your take on Shopify is a tremendous stock. So I'm going to give you I'm going to give you a chart on Shopify. I think that Shopify, potentially, I don't, it's not, you never can say it's going to be the next anything, but this chart it's just going through the roof. It's up $9 today. Let me show you this. It's phenomenal. I mean, that's only the only way you can say it. Um, if you, I know it's a very expensive stock at 919. The thing about this is that Charles Schwab and some of the other brokerage houses are allowing fractional shares. This is something that with a stock like Shopify that really has legs. I think that that might be something that you want to look at. Here's the thing about Shopify and why I think that it even now, even with its run up, I do think that it's forming a very strong pattern. Just kind of want to blow up the pattern here a little bit. As you can see, it's moved up and then it dips like this, and it's forming this handle at about 900, which is incredible. This thing probably is going higher. I mean, it's got a 98 relative strength rating. This is the kind of chart that I like to buy because it's heading upwards. That's the first thing you check for. I know it's very obvious, but a lot of times we don't do it when we're buying. We get excited and we buy it on a downtick. But this is a chart that this is definitely a very buyable chart. Now, of course, it's $900 a share, which is a lot. And there's some other stocks out there that aren't quite as expensive where you could pick up some more of this. But I think Shopify is tremendous. And if you have it in your portfolio, I wouldn't be a seller at this point. Even if it goes up about 20% over where you bought it, still hang on to it, because I do think this may be even better than it's been. And it's been just incredible. So, it's just been incredible. All right. Are we in a confirmed uptrend? Yeah. Well, that's a good question. Let me show you the actual chart. This is the reason it's kind of like, when you fly a plane, you want to look at the instruments, because sometimes you can't tell which way we're going. It doesn't seem like it, but we are in a confirmed uptrend. As a matter of fact, this is the first slide that I showed. Not only is the QQQ up, the spider and the diamond, but the market is in a confirmed uptrend. This is why it right now is a dangerous time to be shorting. Now, that probably going to change. I do believe that this market is gonna get worn out, and we're gonna get some good opportunities. But right now we are in a confirmed uptrend, so you don't want to be short in anything right now. That may change, but right now you don't want to be short in the market. It's too risky as we're moving higher. Now, do I think that this is going to continue through the summer? Well, no. I think that once it becomes apparent with this reopening problems, I think that we may see the uptrend basically move sideways. But I don't believe right now it's a good time to be short the market. Again, I'm only long 5 stocks currently. My holdings, and I didn't put up the slide, but basically my holdings are currently are Netflix, Microsoft, Tesla, Veeva Systems, and Veritex Pharmaceuticals. So I don't really have that many holdings right now. I basically was called out of my holdings in PayPal. I did fairly well on that. It moved up just very nicely, and I was called out. But I'm only in 5 stocks currently, which is kind of amazing. I typically like to trade 8 positions, but right now I'm not seeing enough conviction in some of these to trade them. So that's how I'm doing it. All right, so let's see. Hey, Stock Talk, great, love this. What do you think of Toy? Let's take a look at that chart for Toy. See if I can bring that up. Toyota Motors. Okay, here's the thing. Here's the problem that I have with Toyota, and this is very interesting. Um, we're seeing a very interesting um, change in the market right now. We're moving from the former leader, which was Toyota, to Tesla. As a matter of fact, up until last month, um, oops, up until last month, um, Toyota TM, I think they're talking about TM, Toyota Motor, was the most valuable was the most valuable automobile company in the world. That has changed. Believe it or not, the most valuable the most valuable uh, motor company in the world is now Tesla. Let me show you this. This is very, very interesting. You have a situation where the market cap for Toyota is $175 billion. Now, for Tesla, the market cap is, there we go. Oh, get that. The market cap now for Tesla is, let's go down here. I think it's 178. Yes. No, I'm sorry. It's 185. This is a very historic thing that has just happened. I don't think a lot of people realize this, but there hasn't been a new automobile company created in the United States since the 1920s. And so this is the first one it's the 1920s. That's almost 100 years, about 100 years since Chrysler came onto the field. Now, Toyota has been a powerhouse literally since the 1960s. And they were obviously the first company that went into the plug-in hybrid market, and I mean the hybrid market in a big way with the Prius. But they are losing out in the race, and I predict that in 5 years, Tesla is going to be twice the size of Toyota. And so this is one of the reasons why I have against my normal allocations, have over allocated things related to Tesla. Do I think it's going to continue to go up? Yes, but it's going to go up. It's not going to go up in a straight line, that's for sure. So, but I don't think you want to short. You don't want to be against Tesla, because I think they are taking market share from the absolute biggest companies. I think that other automobile companies are in trouble. I think that General Motors is in trouble, of course. I think Volkswagen is in trouble. And I also think that the German automobile sector in general is in trouble. And particularly Volkswagen, I think is very, very, very is in a big trouble. This is the reason why you're going to see all kinds of weird stuff with certain companies that are suppliers of these companies. So this is one of the things you've got to be really careful if you invest in industrial type stocks, is that you have to be really careful to stay away from some of the companies that are suppliers to Volkswagen and Mercedes and some of the other stuff, because I just don't think they're going to do that well. The same is true with Toyota. Toyota is not as strong as I think that they should be at this point. So, that's something that is kind of a weird deal. So let's see. While we were on Shop, what's your take on Shop versus Square? Well, here's the thing about Shopify. Shopify is sort of in a different category than Square. The advantage that Square has is that Square is really Square allows the small micro business basically to take payments. That's why I think Square is it's really, really breaking out. If you're looking for just percentage increases here, I think you're better off with Square right now. rather than Shopify. The only reason is because Shopify is so extended, and it is quite an expensive stock. That shouldn't scare you away, but in terms of percentage percentage upward momentum, I think that Square has some ways to go. Now, here's the thing: Square is down today. It's about 1.3% down, but it does have a 99 rating on, and it is a powerful stock. I do believe, based on this chart, that it is moving higher. Now, here's the thing about Square. I would be, there is not a proper buy point on this right now. I would want to see, I would, before buying Square, I think I would wait to see if there was a breakout from this level here. And I'm going to blow up the chart a little bit just so you can see that. But there is there we go. Okay, let me just show you that there is a level here. As you can see, it's sort of running out of gas here. I would want to see it consolidate a dip here to this 100-day and then show a handle. And then once there's a handle on this, I'd probably be buying it with both hands. I really think Shopify is a great stock, but I think that Square has the potential of just even going higher. So that's my take on Square. It's still pretty expensive compared to its earnings. So. But I do think it's possibly going higher, but I would want to wait for a consolidation. Oh, Ultra, this is a good company. Ultra Beauty. One of the things during this pandemic is that a lot of people, want to, they can't go out and spend a lot of money, but they can definitely go out with Ultra Beauty now. Here's the chart on Ultra. Let me show you this. Interestingly enough, this is sort of a Dallas-Fort Worth company. They're based in Denton, Texas. Here's the thing: I wouldn't be a buyer at this point just because of this chart. I don't like to buy on a downward trend, but it's up 757, which leads me to believe that it's going to move up to the 40-day moving average. Let me see if I can get a better chart here. That's a little bit bigger that we can see it more clearly here on Ultra Beauty. Okay, the thing about Ultra is that this is one thing. This is not, you don't want to be, if you're not in this stock right now, you don't want to be a buyer right now, because you want to see it move up to at least above the 50-day moving average before you buy it. But this is a very good stock. It's making its way from the March 23rd lows up. So hopefully we'll see a reversal here, but it's not. But the relative strength is only 21. So I'd be careful with this one. I wouldn't probably be in Ultra if I wasn't. If I was looking to enter the stock, I wouldn't enter it. This is a watch list stock, and I don't think you want to be there. What about Nikola? Will they become Tesla? My answer to this is no. I mean, I wish they would, because, I would love to buy a stock that would go up like Tesla. But here's the problem that all other automobile companies have, and as well as Nikola. They cannot manufacture the batteries. Right now, the constraint on electric vehicle production is the batteries and the battery formula. And this is something that Tesla really has a 2 to 3 year lead on the rest of the world on. And they are increasing their battery production. As a matter of fact, they're talking about building a gigafactory to build these batteries in Austin, Texas. They already have a major facility that is under construction in Berlin, Germany. And of course, they built Shanghai out. And these are primarily to build batteries, but also to build cars. They have reconfigured their production of batteries so that they can produce batteries that have actually longer range, which is kind of amazing. So I mean, I think that it's going to be very hard to catch Tesla's lead. I mean, I think a lot of car companies are just going to have to get used to the fact that basically they're going to be squeezed out of the market for about the next 3 to 5 years. And if you don't get on board this, it's just they're going to get rolled. They're going to get rolled. I mean, I wouldn't have said that a year ago, but it's just looking like, the movement to EVs is going to actually increase, and that a lot of the a lot of the industry that makes cars, internal combustion cars, is going to be obsolete, and that's not for everywhere. I think that in the third world, the internal combustion engine probably has another 30 to 40 years of life, but in the first world, in Europe and increasingly in Asia and North America, I don't know. I don't think it's going to be very long before a significant amount of cars on the road are going to be electric of some kind. And quite frankly, if you're looking at the Nissan Leaf compared to the Tesla Model 3, there's no comparison. The Nissan Leaf, which is probably one of the most cost-efficient cars outside of a Tesla Model 3 or Model Y, can only go about 80 miles. So it's going to be very tough for a lot of people in the business. But here's the thing: everybody, now that Tesla's caught on, everybody is going to say, "Hey, we could be the next Tesla." Be very, very careful, because the problem with Nikola is that they are moving towards the electric truck market, which I think is a great market, but they're going to have to compete with companies that have far more capital and far more, and actually can build things, companies like PACCAR and companies like that. So I don't think Nikola. I mean, I think it shot up. It may be a trading stock, but if you're looking for a lottery ticket, I think it's there. But I don't think for long term it's going to do that well. Now, I could be eating my words, but that's my opinion. I think that I think in many ways the electric vehicle market, the window of new startup time is closing, and that the other people that'll compete in this market will be existing car companies. Now, Nikola may be purchased by somebody else, but I don't think they'll ever be a competitor to Tesla. That's just my opinion. Netflix, is it still a buy? Well, I'm currently in Netflix, and I still think it is a buy, even though it has had trouble as of late. I mean, I'm trying to sell currently a 465 call. So let me show you the chart of Netflix in FLX. I do think it is, because the thing about Netflix is, not only is the chart good, yeah, it's up significantly today. So let me just show you the chart. I'm currently in this stock. As you can see, it bounced off the 40-day moving average. It's at 446.44, up $3, a little bit under 1% today. That's just really a bounce from last week. But I do think it's going to bounce up here. I think we're looking at it to go about to the 460, 465 level. And I have sold a call at the 465 level for July 10th. So that's what I'm that's kind of where I'm looking for it to go. It's also number one in this group. I do think it is a buy, but I think it's a buy only from about this level on up to about the 465 level. It's getting a little bit extended. I think there's better ones to enter. I've been in this for a few weeks, so I've gotten, I've sold some nice calls on it, but I think entering this now is going to be a little bit more difficult than it's been. So, but I'm still very high on Netflix. I do think a lot of people are going to be, watching, and they're just basically eating the lunch of the, of the broadcast networks. I mean, I think the broadcast networks are just in real trouble. I think that I think the world is changing so much for the, cable companies are going to end up becoming just basically internet service providers. They can't compete in the really that well in the content world is like they used to. This is Atlassian. It's down significantly today. It looks like it's probably going to bounce off of this 40-day moving average. This is something that you got to look at. If this moves higher this week on an uptick, this is probably a buy. I suspect it's going to trade up to about 182, 183. There's a little bit of movement here. I do think it's a good stock. I'm currently not in the stock, but I do think it's good. I wouldn't be a buyer on a downtick like today. I would wait to see if it holds the 40-day moving average. I think there's likely it will, but you never can tell. There's going to be a lot of there's a lot of rotation right now in the market. The value stock plays have really not done well, and so really it's still the mega cap tax and potentially some of the healthcare and pharma names, which I think you're gonna kind of be where you want to be. Okay, Nugget, NUGT 3X Bull Gold, gold mining. Here's the problem that I have with that, is that I think that you're better off instead of going with the ETF. I think you're better going off with FNV, Franklin, Nevada. And the reason I do is because it doesn't have the junk. It basically only has the good. And I want to show you this chart because it's doing quite well today. And this is a stock that I think that if you're looking for a gold play, this is something that you might want to look at. It's retaken the 40-day moving average. It's up a little bit, about 1%, but it's going to move above. It's going to move up from here, I believe, based on this line. It's still not really buyable, but it has got a 99 composite rating and it's #1 in the group. So why not buy quality instead of buying more shares of a less quality like bullion? Why not buy a better quality just stock itself? I mean, that's sort of my opinion on this. I don't think that in this particular case, that's not always the case. With biotechs, sometimes it's better to buy the ETF like the IBB, but in this case, with the golds, I think you might want to look at two stocks. One is KL, Kirkland Lakes Gold. The other one is Franklin, Nevada. I don't think you're going to be disappointed with those because of how they have invested. So pretty good. All right, so let's see. CMG versus DPZ. Okay, well, let me look at CMZ just really quickly. CMZ. And let me look at that chart here. Oops. Okay, well, did I get that right? Huh, okay. CMG, I'm sorry, CMG. Wow, why did I do that wrong? Okay, CMG. Look at that chart real quick. That's Chipotle. Okay, here's the problem that I have with Chipotle. I mean, it's up today, but I'm too spooked about the retail reopening to go big on anybody that's in the restaurant sector. I just think it's dangerous. I know it's up 7%, and that's great, but I just don't see it. I just don't see it. That's just my gut feeling. Let me look at DPZ to kind of compare it. DPZ. This is Domino's Pizza. God, I don't even like Domino's Pizza. I mean, I think at 367, there's just better deals out there. There's just better buys. I mean, if you're going to buy a Domino's, why not buy the trade desk, TTD, the trade desk, which is a much better stock at 404. Now it's after hours is up $2. I don't know. If the problem that I have with companies like with companies like Domino's, they're great companies, but I just don't see them having a lot of expansion. Now, if we stay in this lockdown mode, they're going to be selling more pizza, definitely for carryout, but there's a lot of competition, and I don't know. It just doesn't seem like it just doesn't seem like it would be great. 5G recommendations. This is an area that I'm really interested in, and I think you should too. There is a stock, Qorvo, QRVO, and I love this stock because every new iPhone is going to have about 6 of their chips. They're down a little bit today, but it's very strong. Let me show you this chart here. This is the one that I really like for, for the 5G play. Now, here's the problem. I would buy it today because it's downtrending. You never want to buy on a downtrend. Wait until this thing bounces off the 40-day moving average. I suspect that's probably going to be at about 104. So if you see a turn on the stock at about 104, then potentially it's going to be good to re-enter the stock. But this is the one I like. This is a chip play on 5G, Corvo, and I think that it's it's a very good, something that very, very worthwhile taking a look at here. All right, so let's see on questions. STS, will this go up? Okay. Well, let's look at STS. STS. I wish I could give you a definitive answer. Oh, this is ProShare Ultra, S&P 500. You know what? I wouldn't be. No, I don't think you want to be in this one right now. By the way, if you're looking to this kind of play, this is basically a unleveraged. Yeah, okay, this is ultra short. Okay, this is shorting the S&P 500. I think that's very dangerous right now to short the S&P 500 because we are in a confirmed uptrend. Now, when that changes to uptrend under pressure, which I suspect it will because I think that's going to happen, but it's not there yet, I wouldn't be in the stock because this is going to short the S&P 500, which is not really, it's not good to short it when we're in an uptrend. And as I want to pull back this other slide here just to show you, it doesn't seem like it, but we are in an uptrend, and that's something that you want to be very careful about shorting in an uptrend. This is, we're in a confirmed market uptrend. So any ultra short ETF like the SQQQ or that, you don't want to probably be in it at this time, just because it is, it could be very detrimental. I mean, it can move against you very hard. Hey, Arnold, how are you doing? It's Micron. Okay, Micron has an earnings, I believe. About a year and a half ago, I was major in Micron. I still really like the company. We are sort of in a semiconductor super cycle. What do I mean by that? Well, every about 18 months, the semiconductor industry goes through an upgrade cycle. And when that happens, the companies like Applied Materials, like KLA, the companies that make the equipment tend to rally, as well as do the companies that make the base components. And Micron, being the most prominent manufacturer of memory, that's basically not South Korean. The two other companies that make most of the memory are Hynix and Samsung. Micron is an American-based company, but it is very, very. It makes a lot of the memory. So whenever there's an upgrade cycle, whenever there's movement to the cloud, you're going to see demand for the product. Now, they are up slightly, 8 cents, and they're up $3 after hours. So they had a good number. This is potentially a buy for tomorrow. This is interesting. Thank you very much, Arnold, for this. If a company has a good earnings report, as did Micron, and you might want to go in it tomorrow. I do think that will continue. I mean, I'm looking at the after hours number here, 51.53. I don't know. I suspect this is probably, if you're going to be in the stock, you're going to probably only be in it to about, I'm thinking about 54 is where you'd want to be in it to. It's a little bit weak on the composite rating, but I do think it has legs. So, this is definitely the stock. It's a little bit early. There isn't a buy point that's been defined. yet on this one, but Micron definitely good stock, and I do think there's going to be demand coming. So it's we're in a good cycle. Bought puts on the Spider, 285 strike, August 30th. Thoughts? Wow. Let me go back to the Spider here. I think I have it in. Let me see if I can just pull it up here and look at the chart for the Spider. Here's the thing about the Spider, and one of the reasons I haven't been active is because of the Fed has intervened so heavily in the market that I think it may be tough. Here's the thing: if you are right now, a put on the Spider might actually be pretty good. Okay, bought puts on the Spider at 285 strike, August 30th. You know, I think that I think that might be a pretty darn good trade, actually. I'm looking at the chart here, and you might see this one. Now, did you buy them or did you sell them? Okay, you bought them? Okay, okay. Well, if it declines, and it may, and I think we're coming, I think we're going to readjust, and if it declines, that might be okay. Well, the key to this one is going to be if the Spider closes below the 300 level, the next stop down is about 285. So you could possibly be in there. That's not a bad play. I kind of like that play. Definitely. So thanks for bringing that up. That's an interesting play. Um, is it the right time to buy Boeing? No, don't buy Boeing. Don't buy Boeing because it's the problem with Boeing is that they have some issues. It's true they're going to probably be able to get this 737 Max certified, but the problem in the industry right now is that air travel is at an all-time low, and it's coming back, but a lot of the Boeing jets are parked out in Marana, Arizona, so it's not a good time, I don't think, to be in Boeing. Now, if you're willing to take a long-term view, maybe it is. But for trading it right now, I'm a little bit worried. I know it's up today, but I think that there's long-term issues with Boeing, especially in their space program and also in their airplane program. I think it's going to be a rocky road for them. So let's look at Cavco Industries. Let's see. There we go. This bounced very nicely off the 40-day moving average. Okay, it manufactures. Oh, okay. Oh, I like this one very, very much. I didn't recognize it. This is a winner. Here's the thing, folks. In the next few years, unfortunately, um, the amount of single family homes that are going to be built they're going to build single family homes, but they're going to be much more expensive. The mobile home industry, this is an area that I've been watching very, very closely because I'm very interested in this industry. This is the only way that many people are going to be able to get an affordable home to live in is with mobile homes. And up until the mobile home industry sort of crashed in 2000. It's coming back strong. Now, here's the problem with the mobile home industry is that many of the parks that they can put these mobile homes in them, they're not building any more of these parks. Also, another thing about mobile homes is that they are not financeable like a regular house. So this is an issue. But I really like this. I really like the action on this Cavco Homes. I mean, look, it's up $2.27 after hours. It's got a 91 composite rating. Wow, I just think that this is really good. I mean, this is really, really good. So, um, I think that yeah, I think the panelized home industry is definitely It's definitely the future, and so this is an interesting one. I'm gonna put this down on my list. Thank you very much for bringing that to my attention. I hadn't really been looking in this area, but the um, the home building industry is definitely going to see some strength. We just haven't had the homes built, especially here in Texas, in the last few years. It's been a drought, and so this is a potentially a really good play. I appreciate this very much. You're watching on Periscope. I really like Periscope. Lululemon, wow, Lululemon has just done tremendously. I wish I understood the stock better than I do, but everybody that I know, I mean, my girlfriend loves it. I think she just thinks it's the best. And look, it's up. Wow, it's up $3.60. I mean, this is just tremendous. I wouldn't buy it on this particular um, chart because it's a downward trending chart. I don't like to buy the downward trending charts, as you well know, but it is strong. And look, it's $10 up after hours. Man, these guys are taking all the retail business. So definitely Lululemon. I mean, you can't argue with the success that they've had. That's for sure. And with Nike basically taking the hit, here's the problem that Nike has in KE. They lost about 40%. Their sales were down something like 40% on their earnings call. It was a disaster, and they're getting about 50% of their almost 40 to 50% of their sales online. Nike is in trouble, but Lululemon just seems to be eating their lunch. So, gosh, what is the name of that mobile home stock? Well, the mobile home stock, they're actually a mobile home manufacturer, is CVCO, Cavco Homes. Now, I want to tell you about another stock. This is kind of an aside. Um, I do believe that we're going to have a massive affordability problem in housing, especially in states like California. And people are going to just have to leave California because of the affordability. There is a ETF that owns mobile home parks, and it's run by Sam Zell, who's one of the biggest in the industry. It's called Equity Lifestyle Properties, ELS. And again, I wouldn't buy this chart right as we speak because it's downward trending, but it looks like it's going to move off this 40-day moving average. Now, here's the problem with the real estate industry. With all of this shutdown, a lot of people aren't going to be able to make their rent payments. I know I have this problem right now. I have a house in Monterey, California, and the tenants have refused to pay rent, and so we're going to have to basically evict them. And it's not fun. This is happening everywhere you can in the U.S. and other places right now. So most of the real estate REITs, I hate them because I think you're going to be in trouble. Equity Lifestyles, though, is different in that many of the people, they offer the best, lowest priced housing available, and that's mobile home parks. Most of these parks are either in Arizona, Texas, or in Florida, and they all are pretty good. So even though this one is down today, trading down, it's up after hours. I do think if you're looking for a long-term real estate play and you've been in things like REITs, like shopping mall REITs or something like that that have gotten killed, and you want to stay in the real estate sector, this is the one you want. Equity Lifestyle Properties, ELS. This is the one that you want to take a look at, and it's going to produce nice revenue because this is a dividend stock. It pays out a regular dividend. So ELS is probably going to pay you a nice, if you're not getting money in other things, that's where you possibly can get money. Do you think Air Canada will go up? Gosh, I wish Air Canada would go up. It's a great airline, but I can't be behind them. Um, it's not just Air Canada. I think the sector in general is in really bad shape. I would like to see Air Canada move better, but I can't get behind them right now in the right now in the space in the airline space. The only one I really like is Southwest Airlines, SWA. Um, But even with that, I can't really get behind them. I don't think Air Canada is the way to go in here, unfortunately. Great airline, but I just think they're going to have all kinds of problems going forward. I don't see them being able to do well in this kind of environment. On the Toronto Stock Exchange, ENB. Let's see if I have ENB. Let's see. There is one stock, Canadian stock, that I really, really like, and of course that's Kirkland Lakes Gold. It's a Canadian stock, but it does co-list on the American exchange. Yeah, this is a good. Yeah, here's the thing about this. Let me take a gander at this chart here. Pull it up on the screen. Basically, it's adjacent in the distribution of gas. Well, here's the thing: we're swimming in natural gas. I wish natural gas was a good business. It's just not. By the way, Chesapeake, CKE, I think is it CKE? Yeah, Chesapeake Energy filed for bankruptcy, and this was a huge company based in Oklahoma City. So it was in the gas business. I don't think you want to be in this business. Here's the problem with the oil and gas companies. It just doesn't look very good for them right now. I mean, maybe that will change. I'm a little bit of a I don't really want to be a pioneer on this. I don't want to get back into the oil and gas area until I see it firm up a little bit. I definitely think there's value there, but I just can't recommend an oil and gas company in this environment. I just think it's too risky. I think you're better off with more sure plays. That's my opinion. I am registered, and oh, hey, by the way, and I just wanted to oh, you registered. I haven't gotten the alert. I am so sorry. Here's the thing: if you could check up on your, here's the thing: if you just go to my TikTok account and just go to my profile, just hit on that, and it'll take you right to the sign up page. Just put your email address in, and we'll get it right out to you. Sometimes it doesn't register it right. I think I fixed most of those link problems, but yeah, and if you need to get, if you need another way to get to the sign up sheet, just do it this way. It's basically DallasTradingFloor.com, and then just put your information in there. We'll get it right. We'll get you right in the system. Here's the thing. I don't know if you've heard this, but TikTok, like my favorite platform, it may be having difficulty in India. They've banned it in India, and a lot of people, are on it in India. So I don't know. I don't know what the I hope it isn't banned in this country. I doubt it will be, but it's better, just to make sure that you continue to get all this stuff. If you just go to the list, and I'll get the trade alerts right out to you, and it's totally free. So and you can cancel anytime you like. So it's free, and hopefully help you make some money. Okay, had LSPD sent. Okay, had LSPD. Okay, let me look at LSPD real quickly to see kind of what it is. LSPD. Let's see if I give you a. Did I get that right? LSP? No, I didn't get that right, did I? Read Rich Dad Poor Dad recently, and Man Want a Book. Must read, absolutely. No, Rich Dad Poor Dad is a great book, by the way. Basically, it talks about how the rich look at the world, and this is the thing that you need to do. And it kind of changed. It kind of blew my mind. And this is about 20 years, more than 20 years ago for me, is that I worked for a guy, and he taught me how to trade stocks. But basically, the first thing he did was he sat me down and he said, "Look, Jim, you got to control your spending, and here's how you do it. Every dollar that you get, 70% of it, that's what you live on. You take 20% of it, you put that either in the market or in property, and 10% you save in cash, so that if you get an opportunity, you could bounce on it." And boy, I've done that for years, and it just changed my life. So Rich Dad Poor Dad is also really, it's a great book. Everyone should read it, and it is a bestseller. So I think it's just tremendous. Okay, so let's see. Shopify. Okay, SHLL. Let's look at SHLL real quickly. Go back to there. SHLL. Let me get that. SHLL. I'll bring that up. There. Oops. Would help if it. All right. SHLL. Okay. Okay, this is one of the acquisition companies. This is a blind pool. It's up tremendously. Wow. Here's the thing about blind pools, and I know you're not going to like me saying this. You're going to say, "Gosh, you're raining on my parade here." Here's the problem. I don't like these acquisition corps because I don't know what they're buying. That's my biggest problem with them. And not that they're bad, but typically the way it works is that they get a shelf company that has been listed previously, like a mining company or something like that, and then they put money into it. They're not operational, and then once they get to a certain level, they then go and do a reverse merger with a company that they want to fund. Now, Nicola did this very successfully, so it can be done. I can't invest in this. This is more of a lottery ticket than anything else. If you have some information on this, which I don't have, this might work. But $31, I can't see it. I can't recommend this because I think it will end in tears for you. I just do. But again, I'm certainly not the all knowing. I'm certainly not all knowing when it comes to things like that. So, what was the name of the book you recommended? Can Slim Method. Oh, okay. Well, this is a really really good question. This is one of the ways I learned to trade myself. It is how to make money in stocks. Winning system, good times or bad. So I'm going to put that in, and I'll just show that to you. The book on the screen. How to make money in stocks. A winning. Oops. Winning system. Winning System for Good Times or Bad by William O'Neill. Let me just pull it up here, and I'll just. Oops. Oh, that didn't show me there, did it? Okay. Let me see if I can show it to you on the screen so you can see it. By the way, it's in practically every half price books. If you have one of those available, there's tons of these out there, and it's easy to get this book, and it's well worth it to study this. You can pick this up for next to nothing, but basically it's the same book. It's in several editions. I recommend getting the second or third edition, but just really really great. And I'm not paid anything for this, by the way. But if you want to learn the system that the pros use, this is the system. It's called Can Slim, and basically it was invented by William O'Neill. And this is the book that basically shows you how to do that. It costs you $4. This is a good read. If you read this, you're going to get an idea of kind of some of the things that I'm talking about, because they talk a lot about pivot points and all that kind of stuff, and it's all basically in there. So really really good. Amazon, wow. Here's the thing about Amazon. Amazon is just, I think, it's one of those things. I mean, we're living in the age of Amazon. Um, my only problem with Amazon is the price. I mean, I think it's a terrific company, but it's tough to buy a lot of shares at $2,600 a share. I mean, a better way to buy this would be to buy the QQQ, which contains a lot of Amazon. But as you can see, yeah, it's just continuing to go. And I think this one, this could be the new Berkshire Hathaway. It's 26.80 a share, which is amazing. By the way, Charles Schwab has fractional shares available, just like Robinhood. I'd recommend Charles Schwab over Robinhood because they typically have better execution on their things. Well, thank you everybody so much for tuning in today. I'll be in tomorrow at 2:30, and hopefully, you'll take a look at my trade alerts. We'll get you, we'll get them out to you. And basically, what I try to do with these is to show you kind of how I am trading the market. And so it might give you some good ideas in that. It's totally free. Again, you can get it by going to www.dallastradingfloor.com. And if you're on TikTok, just go to my profile and hit the link, and it'll get you right over there. So again, thank you very, very much, everybody. I hope that you're having a good week. This will be a short week. I'm only going to be between on Monday through Thursday, and Friday I'm going to be off because the markets will be closed. But I hope to see you back here tomorrow at 2:30 Central Time.